I apologize. We're going to miss the beginning of the webinar was not being recorded, but we're just into 2023 here, and just to catch people up, we're just discussing with our panel with Joe Duffy, Keith Harwood, Wendy Kirkland, and Chuck Hughes that the challenges that they've experienced going back, looking back here in 2023. Given the market fluctuations, and I'll throw this out to Keith and Chuck. Given the market fluctuations in 2023, how did your trading strategies evolve, or did they not? Were you able to just stay the course with what you normally do, and maybe what key lessons did you learn?
Go ahead, Keith.
Just to go ahead, yeah. For me, a lot of the chop that Wendy mentioned at the beginning of the year, we had a rally and then a pullback and then a rally and then sitting and then a rally at the end of the year. I think the biggest thing for me was along with that, recognizing which trading strategies work in various market conditions and making sure to identify those and make sure I'm keyed in on those strategies during that kind of environment. So it may not mean that I use the same strategy all year round. When I think that we're going to be sitting in a consolidation period from the technicals, I may look to do more of what Joe had mentioned at the beginning, looking at some of the nuances of options. Those things like charm and skew and calendars and term structure of options, as opposed to looking for a pure directional bet. Once we start getting into a trend, the directional bets become more of a key. And so, people need to be nimble when we've got these varying markets, moving from one strategy potentially to another, allocating more of the portfolio to the strategy that seems to be working the best at that time. And that's something that I really had to remind myself of, is not to get caught into a mode of thinking we're going to consolidate forever and the trend will not return, because then at the end of the year, obviously it basically did. And it's pushed the VIX right back down to those low levels we saw, pre-COVID. So right now, I think we've got some interesting changes going on in the marketplace, and it's all about finding the strategy that works best given current market conditions, as opposed to trying to force a strategy into the current market conditions.
That's interesting how you kind of adapt. I know when I talk to traders, especially those that are struggling to be successful, that's the real thing that trips them up, because they'll use a strategy that works for a period of time, everything's going great, and then the market will change or go into consolidation, and then what they were doing before is no longer working, and then they just end up blowing up their account because they can't adapt. Chuck, what has been your experience, with the market? We had a crash not too long ago in 2022, and then everybody was saying after we rallied, we're going to retest the lows, and then we ended up screaming, making up, new all-time highs in the S&P. How did you navigate all that?
Well, in 2023, I simply followed my trend following system, and most of the known information about a stock is reflected in its price. So we simply follow the price. I have a trend following system, very basic. And that led me to the Magnificent Seven, and I traded options on the Magnificent Seven and option spreads, and that worked out pretty well in 2023. I trade in the money debit spreads, and when I trade those, the stock doesn't have to go up, and it can even go down, and I'm still going to realize the full profit potential for the option spread. So traded a lot of spread trades on those Magnificent Seven, except for Tesla. I can't trade Tesla successfully, so I ignore that one. But the other six, we had a good year trading option spreads and also option purchases. I use what I call the 1% rule whenever I buy an option. And with the 1% rule, the underlying stock only has to go up 1% for the option to start profiting. So that gives us a higher percentage of winning trades. So we had a good year in 2023.
Fantastic. And stay tuned, everyone, because at the end we have a great offer for you. So if you're interested in some of the programs that our traders have for you, you're going to get some great deals on those. So, we look in retrospect, what event or trend in 2023 do you think had the most profound impact on your strategy or just market dynamics in general? Maybe Wendy or Joe, if you guys, either one of you want to field that one. What was the big event or big trend that, had the biggest impact on your portfolio or, on the market in general, do you think?
I think that's kind of redundant, honestly, with the question I already answered. Yeah, I don't really have anything new to what I said before in that term. In events, I don't trade an event really. Like today I was long TLT from a few days ago, but I take it off before the Fed speaks or anything like that. Same anything to do with earnings. If I have a stock that's earnings are coming up, I'll take it off before the earnings. So I try not to be an event trader, I guess. So.
And Wendy, what anything?
I pretty much agree with that. That I really kind of tackle my entries are based on patterns, and as long as the pattern stays intact, I'm going to remain in the trade. Or if I've set a profit potential, and when it hits 30% or 50% or whatever, I'm going to maybe go ahead and close it. So that it really doesn't, what's going on doesn't really affect it. I trade what is happening and patterns and the stages that they're flowing through. So, the news sends things up or down, but it doesn't really, it's not like an event is something that I am consciously aware of or do anything about. That I just handle it day to day, whatever's going on.
Okay. And, I think in a little bit, we're going to head into 2024 here. But then we're going to talk a little bit about something that might have an impact on all of you. And I'll be interested to get your opinions on that. But let's move into 2024 here. And as we move into 2024, what major economic or market trends do you foresee shaping the trading landscape here? Maybe Keith, if you want to take that one.
Yeah, certainly. So I think the two biggest things that I think are going to be in the back of everyone's mind consistently here are, what's the Fed going to do? Are we going to have those rate cuts? And are we going to have the number they are projecting right now? The 3 this year, is that going to come to fruition? How are those expectations changing? Because that's going to start to put some potential for volatility from more of a fundamental input. I think both Joe and Wendy touched on, if your entry basis is on technicals, you want to be trading based upon technicals, not based upon fundamentals. But be aware that the market's looking at the Fed. And of course, later this year and throughout the year, we're going to be looking at that election coming up, because it's going to be important for potential future economic, decision-making processes. We saw big changes when Biden won the election. Oil prices went up for months in a row. It was one example. So that could shift a lot of the individual sectors, depending upon whether we're looking at Biden or Democrat versus, if it's going to be Trump, Haley, or who knows who else, if somebody else comes around. I think those are going to be the big sort of fundamental inputs that I'm going to be focusing on for much of the year. From a market perspective, actually, I think the zero data expiration options could have a very big impact on the term structure of options, and could really continue to mute down intraday volatility. Because as Joe mentioned earlier, most people coming into these zero data expiration options are sellers, pushing premium down, meaning that those that are trying to trade around ranges are getting tighter and tighter scalping levels within the intraday. It can really, really impact the day-to-day movement intraday. Overnight, we may see a lot of the movement, but once that bell rings in the morning, we may see just sort of stagnation throughout the middle of the day.
Interesting. So, so let me ask you, Joe, because I know, Joe, you do some intraday trading. What are your thoughts on what Keith had to say there? You think that this is going to be something that could really put a damper on intraday volatility, or
I think he's right. I don't
Yeah.
trade the options intraday. Honestly, I only trade the ES, which is the futures contract. Yeah, the only thing I would say on that is, and really it's just, you can only stretch something so far because there's so many sellers in there. There has to be an event to clean out the, to clean out the closet, where everybody, so I think we may get more, even though 100% he's right, it dampens volatility. At some point, if everybody keeps making money, something's going to happen to, to change that. So.
Yeah,
But,
back in 2018, we had that Volmageddon where the inverse ETFs on the VIX went to zero. And that was a huge element of wiping out some of those sellers back, 5-6 years ago now. I think you're right that we'll probably have to have an event like that to stop people from selling those zero data expiration options.
Wow, interesting. Okay, so that's something to definitely be out on the lookout for. So, what sectors or types of investments do you believe traders should pay close attention to in 2024? Maybe Chuck or Keith, maybe if you have any thoughts on that one.
Go ahead, Keith.
I'm on mute. Yeah, so one of the big sectors for me is going to be looking at oil again, because as we get closer to the election, I think that could have a big impact. And oil is always kind of a big element for the global marketplace. And then the other one I'm actually looking at a lot is financials. And the reason behind that is, again, the Fed. So as you see interest rates moving, I like to look at financials quite a bit. Tech has been obviously a big driver of market movement, so it's always on mind. Apple, Microsoft, all the big tech names. But for me, dialing into something a little bit different from tech is going to be a lot of financials and oil names as we get through the news.
And Chuck, do you think this tech rally, maybe we get some corrective action, but do you think it continues?
It's overbought right now, and we're going to have a series of corrections, I'm sure, this year. But I think the best profits this year probably going to be in tech. Although if you could show that advanced decline chart, John, that I sent you. Okay, great. Yeah, that's a daily chart for the NYSE advanced decline line as of yesterday's close. And we just hit a new 52-week high. And what this means is that the market sectors that are in an uptrend are starting to broaden out. And whenever we hit a 52-week high in that advanced decline line, that means there's a lot of sectors out there that you can trade and probably be successful with in the next 3 to 6 months. So just about every sector out there in this type of market is going to benefit. So that's probably the most important chart I can show you today. So I'm favoring the techs right now and financials, but there's quite a few sectors out there that you can trade they're going to be good for the next 3 to 6 months.
Okay, certainly interesting. And advanced declines, obviously the more positive that number, the better for the overall market, more bullish, I guess we'd say. Is that accurate?
Yes, it gives the market a huge headwind.
All right, excellent. Well, thanks for sharing that chart with. I know you have some others that we're going to take a look at after. And then finally, to wrap up 2024, before I get into another piece that we want to talk about, that is how should traders prepare, for the potential for market volatility or shifts, in 2024 if they start cutting interest rates, all these things that could come into play here. What strategies would you recommend for navigating these changes? Maybe Wendy or Joe, have you guys tackle that one?
Well, for me, I trade patterns. And so if during the periods of volatility, of course, it depends on what the direction is, my patterns go through what I call a life cycle. And so they're born and then they become infants. So that the strength comes in when they're an adult. And so to me, that is then what I focus on, is not to be so involved in the beginning stages of the life cycle, but to go into what I consider as the adult stage or the strength stage, that when the market is strong and there's just a super trend, then you can get in at the very beginning and just go through all of the stages and end up in the strength stage and capitalize all the way along. But to me, I would zero in on the strength stages, whether it's bullish or bearish, and ride the volatility up and down.
Well, for me, I'm not going to do anything different. If it gets too volatile, like you mentioned, I trade ES during the day. So I traded it a bit this morning, but afternoon when the Fed came out, I didn't even think about trading it. So if it gets too volatile, you just stand aside. There's nothing wrong with, flat's a position, and a lot of times it's the best position.
That's a good point. That's something a lot of new traders, I think, would benefit from. Sometimes you just have to stand aside, right? All right, let's get into, I think it's kind of the elephant in the room, the avatar of an elephant anyway, and that is the AI, the impact of AI on all of this and on all of you. I'm going to ask Keith first. Keith, how do you see artificial intelligence impacting trading strategies and decision making, moving forward here now?
Yeah. So for me, and I think for a lot of people, the initial stuff we're going to start seeing with AI is going to definitely be as a tool, kind of like having Microsoft Excel, but more powerful. So rather than having to know how to, program in C# or Python, a lot of people are going to be able to simply ask AI to do the pattern recognition for you. And I think that's where the initial implementation is going to be for a lot of people, is to be able to look for patterns in the markets via AI doing the work instead of having to create, whether it's a spreadsheet or a computer program. The biggest issue with that, though, is, of course, that a lot of AI developers are a little reluctant to get into the financial markets, because then there's the concerns of compliance, and is this computer going to spit out some piece of information that's just incorrect, costing somebody a lot of money. So a lot of this is going to be basically understanding that everything that's coming out of AI needs to be double checked by the traders, and is going to be in many cases as a result of the fact that it's still a relatively new tool for the financial markets. But once you've got development on it and comfort with how the results spit out, that's going to be where I think it can really start to have more and more power and more influence over the market, as people put into place new trading strategies that they can teach artificial intelligence to try to recognize.
And it's interesting that you mentioned some of the maybe negative impacts too. I remember a few months back, somebody had generated an AI picture of some disasters, some part of the world or whatever it was, and it affected the market because the market thought that it was real. Excuse me, and of course it was just an artificially generated image. But maybe I want to throw this one out to Joe. Joe, can you share your thoughts on the integration of AI in trading? What are the potential benefits, and what are some of the risks that you see?
Okay, well, first of all, AI is really just, if you've ever been on a chat group or a chat where you're looking for information from your phone company or somebody, all it does is search for keywords and then try to send you a pre-written response. based on that. So in a sense, we've been doing AI forever because we're just looking at history and trying to find the thread in it so that we can project it forward. Now, the other branch of AI is where you're trying to bring creativity into it, where you're thinking more like a human. Then you're into the real PhD level and above of AI, and I can't really speak to that. But it is going to be interesting because I think that area where there is still some human input is probably going to be good because the computer can find everything now if you ask it the right thing, I guess, right? So, yeah, but I think in a way we've had AI forever, but as it's morphing now, into more sophisticated, it's going to be an interesting thing to watch how it affects the market and how it plays out.
You mentioned that we've kind of had it forever, but if you, I don't know if you guys saw this article, it seems to be going, making the rounds again, but there's a Japanese bakery that started using artificial intelligence. They were developing it back in 2007 to identify the various breads that they sell at their bakery. And of course, a couple of years ago, somebody figured out that they could use that technology to identify cancer cells. So who knows what the implementation is going to be in the future, but you're right. We've been using this for almost 2 decades now in a sense.
Wendy, I thought this might be a good one for you with, AI becoming more prevalent. What skills or knowledge do you think traders need to develop, to stay competitive and effective?
And I don't know that I am the right person for this, that I have been reading about AI for any articles that come out and all, and yet at this point, I have not actually incorporated it in any of my trading because my trades are based on patterns. And yes, I can have programs that say when the PPO crosses or the ADX goes down or whatever, it lists some candidates, so I don't know that you want to call that AI exactly. And I think that there is variables that are on the chart and all, and things that happen within a company and so on, that I don't know that AI is going to be able to pick that out. And so I just haven't figured out for myself exactly how I am going to apply that to my specific strategies. I'm studying, I'm looking, I'm learning, but I just have really not found just exactly the right place to incorporate. So we will see.
And I was wondering, Chuck, you've been doing what you do for a long time, and sometimes they say, if it ain't broke, don't break it. Will or has AI influenced your trading approach, and are you using any AI-driven tools or technologies or anything that you found useful? Is it something that you'll even consider?
Well, I've been back testing with historical data, which is what AI does, from what I understand, since the 1990s. And I test my trend following system, and I first started with System Writer back in the 1990s, which was a DOS program. It didn't work after year 2000. So I've had extensive experience since then back testing my systems. And I just met with my partner in Australia last week, and he's going to take my trend following systems and run them through AI and grade the various systems, give it an AI grade based on the historical testing that AI will do. So it may improve my systems somewhat. So I'll just have to wait and see on that.
Well, that's interesting, and hopefully your students and those that follow you will at some point be able to benefit greatly from that upgrade. So we'll look forward to that. Now I want to get into a section. I want to have, I've got some questions to ask each of you individually, and kind of hone in on your approaches. And but I think we'll lead off with Joe, since you are the outsider out there from Canada, now visiting Palm Springs, as you always seem to do. Have you gotten any golf in while you were out there, Joe?
Not yet, no. But I just got here like 3 or 4 days ago. So
you, I hear the old Bob Hope homestead is for sale. Are you interested?
Yeah, well, it was 90 million, but I offered him 85, but it wasn't good. So
okay, just checking.
Yeah.
No, and your approach to proprietary trading, what do you consider the most critical factors for consistent success? I know traders, that's kind of the thing. I know there's a lot of traders that are, competing in these proprietary, with these proprietary firms to get funded and stuff. And the biggest factor is being able to be consistent. What do you consider is the most critical factor in consistency?
For sure, patience. The job isn't to figure out what the market's going to do and then go trade it. The job is just to wait to see something you recognize and then trade it. So it's actually not trying to find trades. It's letting the trades find you. So your job is really waiter, not trader. So patience, for sure.
I like that one. Okay. And what are the common mistakes that you see new traders make, and how can they avoid them?
Oh, for sure, over trading, which goes back to what I said before. Statistically, the more trades you do, the less money you make.
You've got one of your premium systems. That's the target zone options. How does that program fit into all of this? What do you feel that your program offers the individual traders who are looking for help?
Well, the same. Sometimes if it's active, it might trade 5 or 6 times a month, but a lot of times it trades less because you're just waiting for a good setup. You're not looking for things to do, and that's a common error of new traders, is that I'm a trader, so I better trade, and that's where one of the problems that they have. So yeah. So I'm your patience, I guess.
No, those are good, and it sounds simple, but it's not easy to do, right? When you
it's not very easy to do.
Staring in front of us.
Yeah, for sure. Like I've done some. I guess we won't get into it today, but neuroscience of trading is a big thing, and it's very fortunate that the layman's version of neuroscience we know so much more about now than we did certainly 10 years ago, and before that we almost knew nothing about it. So, and it's not just for trading, just the neuroscience of how your brain works, but certainly the market is probably the number one vehicle for exposing whatever mental roadblocks you have, and everybody has them. The market will find them, and it happens to everybody. If you've ever read the book Market Wizards by Jack Schwager, which talked about the world's top traders, everybody went through it. Everybody goes through it, and some people are able to adjust faster than others.
And just for those who are listening, if you want, you can go to our YouTube channel. That's FFR Trading. There's a video that Joe did about the neuroscience in trading that you might find very interesting. So check that out. I'm going to pivot over to Chuck Hughes. Now, Chuck, every time I speak to you, you're in some other part of the world. I understand you are also vacationing in Maui. Is that correct today?
Yes. Yeah, that's correct. We're at our place in Maui right now.
Well, if I wasn't in Florida with the nice weather here, I'd be even more jealous. But one of these days, I will take my wife and my family out there. So good to see. Obviously, you got a nice tan that you've been working on out there. But with your vast experience trading options, what initially drew you to this field, and how have you seen it evolve over the years?
Well, I saw a lot of opportunity trading options in growing a small account into a large account. So that's what attracted me initially. And I started out I was an airline pilot in my first life. I was on a layover at the Venetian, not the Venetian, I was on a layover in Las Vegas with the airlines, and I placed my first option trade from the hotel phone. That was in 1985. So we didn't have cell phones back then, but that was my first option trade. I was just on a layover with the airlines, and Flamingo, that's it, Flamingo Hotel. And I placed my first option trade, and my first 2 years of trading, I started off with a $4,600 trading account in 1985. And my first 2 years of trading, I made over $460,000, according to my tax returns. So I said, wow, this is great, this options trading. So, and I went to a few Larry Williams seminars in the 1980s, and he taught me system trading, and I developed my own trend following systems. And thanks to Larry, I focused on system trading rather than trading with emotions or just trying to guess, where a stock's going to go. So I learned system trading, and I've been sending out live trade signals for 24 years now. So I have a record of every signal I sent out for the last 24 years. And the best strategy by far has been the option spread strategy, where you can profit if the stock is up, flat, or down. And what I'd like to do is just show you an example. Can I share my screen real quick here, John?
Yeah, you sure can, Chuck. Let me just go ahead and make you a presenter.
All right.
Okay, we see your screen. I see the options. Looks like your calculator.
Okay, yes. Okay, so over the last 24 years of live trade signals, as I mentioned, I found that the in-the-money option spread is the best overall strategy for my members, and that 24-year history proves that out. So what I did last night is I selected an option spread trade for NVIDIA, and what I did is we're looking at buying the NVIDIA February 23rd 570 strike call and selling to open the NVIDIA February 23rd 575 strike call. So that's a 5-point spread. And what I developed over the years were calculators that will calculate the profit potential for an option trade before you take the trade. So what I did is I plugged in the current price for the 570 call and the 575 call. So into the option spread calculator, and this calculates the profit potential, assuming various price changes in NVIDIA stock at option expiration. And in this example, from a 7.5% increase in the NVIDIA price to a 7.5% decrease in the NVIDIA price. So I plugged in the buy strike, the current premium, sell strike, current premium. So we can see, and then I clicked calculate, and we can see the cost for this option spread is $360. So you're trading a stock that's trading at $627 for $360. So that's a good way to trade these Magnificent Seven. It's a good way to trade options if you don't have a lot of money. So quickly here, we can see that if NVIDIA at option expiration, which is in about 3 weeks, if it's flat and it closed at 627.74, which was the closing price yesterday, this option spread would have a 38.9% return. If NVIDIA is up at all at option expiration, the spread has a 38.9% return. But more importantly, if NVIDIA is down 7.5%, this option will still produce a 38.9% return. So whenever you can profit, if a stock is flat, up or down, you're way ahead of the game. And this trade has a built-in profit potential when you take the trade. One other quick thing I'll show you here is
and Chuck, before you get off that, Chuck, I just want to ask you, which of your programs are you trading the spreads?
In all my advisory services, I have the spreads.
Okay.
And members get access to these 6 calculators for 6 different option strategies. I'm showing the call option spread strategy right now. And here's an example. I took this snapshot from my advisory service. This was our option spread portfolio. We have Dell, Meta, Toll Brothers, Vistra, Energy, the XLK, McKesson, Eaton. So we have a wide variety of spreads right now. So what I did is I simply took a snapshot of our spreads as of last night, and we have a $13,000 open trade profit and average return of 369% for this portfolio. So there's no losing trades. And part of the reason that percentage is so high is if we purchase an option, we do a call option purchase. If we have a profit in that call option purchase, we always leg into a spread. And when you leg into a spread, then your percent potential gets really high. So, but overall, as I mentioned, this option spread strategy, trading in the money spreads, has been the best performer over the last 24 years for my members.
All right, fantastic. So obviously, Chuck, you and your services have hit the ground running in 2024, I have to say. I'm just going to switch back here and let me bring in Wendy. Let me get back here and just make sure you guys can see my screen once again. So much appreciated, Chuck, and we'll talk more about what you've got to offer here in just a bit. But I want to ask you, Wendy, now, you know, you're a successful female trader in a predominantly male industry. When I started as a broker back in the mid-90s, I think there was less than 2%, I think it was, in the financial industry. And now I'm hearing it's something over 20%. And so women have come a long way in the financial industry, and you're certainly at the forefront of that. What challenges have you faced and had to overcome in this financial, male-dominated financial industry here?
I don't know that I have personally experienced a whole lot of disadvantages, except that maybe as products are being sold, maybe there's a question with men as to, can she teach me anything? Do I need to learn from a guy rather than from a woman? But personally, as far as the stock market and trading and entering trades and exiting trades and so on, there is nothing. The fact that I'm a woman has had any negative effect at all. It is probably more about whether people assume because I am a woman, if I am able to trade as strongly or whatever as a man is. But I've done pretty well and have lots of subscribers, so I don't really see that there's a big issue.
You're great at dealing with, especially getting new traders off to a great start. What advice would you give to beginners who are interested in options trading but may feel overwhelmed?
And you're right. I feel like the part that I enjoy the most is actually teaching other people to be able to trade. And I think I mentioned it a little bit earlier about the life cycle that patterns and stuff go through. And for me to be able to say that I could look at any time frame chart, any equity, and be able to see where it is within its life cycle, then that is what I try to teach. And so my services, we do have trade services, and so I think of them as being like earn while you learn. I'm all about the teaching and getting people to be able to really recognize the patterns, know when to enter, when to close, and so on. But they still are earning money while they're doing that, so that they can look at active trades and say, ooh, I see how this is working. I see that the price is going up, and then when we close and so on. So that's the way I approach it, is I really am into the teaching and showing through example, I guess is what I'm trying to say.
And you've got a number of different services that focus on both stocks and individual ETFs. What would you say is the key aspect of your trading programs that new members can benefit from?
I guess in a sense that the patterns that I'm talking about, the life cycle that it goes through, is something that applies to any equity, any ETF, any time frame chart, so that patterns form on a 30-minute chart and go through this life cycle. Patterns form on a daily chart and go through the life cycle. And this is what I teach. And if ever a pattern fails, then I know 100% what's going to happen next, because the pattern that conceived the pattern that failed is going to go back into the strength stage or adult stage that I call it. And that is 100% of the time. And so it is those steps, that process that I teach, and then it can be applied to any equity, any time frame chart.
And for those of you, you also can go on FFR Trading's YouTube page, and there's some presentations that Wendy has done where you can see her P3 strategy in action, if you will, and see some examples there. So, Keith, I wanted to ask you a few questions before we move into the Q&A session with the audience here. In your opinion, what are the most critical factors for success in options trading for both beginners and maybe more experienced traders?
Yeah, I think for me, one of the biggest things is always being willing to learn. So knowing that you're never going to know everything about the options market, the technical markets, there's something out there that somebody knows that you don't. So as long as you're continuing to try to learn and try to make yourself better, you're always probably going to, have that passion for trading, and that'll help you out a lot. And maybe even the other part is has sort of been touched on, but be willing to be bored. So don't sit there and put on trades just because you feel like you have to every day, every minute, every hour. Both beginners and experienced traders feel like they have to make money all the time. And sometimes it's better to wait for your setup to make that trade. Actually, it's always better to wait for your setup as opposed to trying to force something in the market. And I think a lot of experienced traders and beginning traders that are willing to wait, but then willing to move, it's that good balance that really makes you find success in the long run.
And I think you kind of echoed, I think, Joe's advice to traders too, just about being able to wait. Let the market come to you, so to speak. And what are some of the common misconceptions about options trading that you encounter, and how do you address them in your training programs?
Yeah, I think the first thing that a lot of people expect out of options is because they're a leveraged contract that they can start making 100, 200 times their initial investment in a short period of time. It really just doesn't work that way. If you think that you can make 200x your money in a year, I'm telling you right now, it can happen. It's not common. And if somebody had a system that was making 200x their money every year, they're going to keep that real close to the vest to make sure that they're doing it only for themselves, because at some point the market can only hold so much of a trade before it starts to get there. Beyond that, I mean, once you understand the risk behind options and really can apply the right risk management protocols, you can, and almost anybody can learn options, learn how to deploy them successfully. But it's a little bit scary for some people when they first look at options, and also maybe a little bit too tempting for people to expect unrealistic expectations. So
one of the things we hear over and over again is about risk management. What role do you believe risk management plays in the success of an options trader, and how do you incorporate that when you teach through your options mastery course?
Yeah, absolutely. So for any trade that I look at, the first thing I look at before the reward is the risk. How much money can I lose on this trade if it goes wrong? And that's not necessarily where I want to exit a trade, but what's the worst case scenario if I can't exit at my desired exit point and the option gets its worst case scenario? If I was selling calls naked, technically it could be an infinite loss. So I don't like to have unconstrained losses or potential to blow up my entire account on a single trade. Then, it's just about calculating the expected value of the trade. So what probability of success I see versus the expected reward. And then, subtracting out the expected probability of a loss and the expected loss in that case. And then that'll determine whether or not I want to enter the trade. But that size is built upon how much money I'm willing to risk, not based upon how much money I want to make. Because if you start doing everything based upon how much money you want to make, you're going to oversize your trades, and that's how people blow out an account, is by putting on trades at too large of a size with more risk than they realized and hitting maybe an outlier loss scenario. You don't blow out your account by making too much money when something goes better than expected.
Right, very important points there. I think everybody that trades certainly can benefit from. So appreciate it, and appreciate all the answers to the questions. Now let's turn it over to the audience here. So guys, if you have questions, and I know you've been posting a few already, go ahead and post them in the Q&A tab there. And if you want to address somebody specifically, just address it to them, and I'll relay the question to them. And so let's see what we've got coming through. Let's see. Somebody asked Chuck, the program that you were talking about, those are debit spreads, correct?
Chuck, you're on mute.
Yeah, that is true. If I could answer for him.
Yes, that's correct. And with debit spreads, of course, you can't lose more than the cost of the spread. So you have your risk limited to the cost of the trade.
Okay, great. And for any of you, you're all trading options. Do you measure volatility by looking at the option price spread as well as the implied volatility? Joe, I know you've got thoughts on that one.
You know what? I'm an old-fashioned. I look at the ladder. I don't think you need all the Greeks, and in fact, sometimes I think the ladder's telling you is better. By looking at the ladder, you can see sometimes, like, options are not a perfectly efficient market, and Keith probably knows more about this than me, but sometimes it favors one strategy over another because things are mispriced sometimes. So I think by looking at the ladder and learning how to look at the ladder, okay, if I'm looking at the ladder and the underlying stock is 94, then I look up at 97 and I say, okay, well, what's the option going to be worth if the stock moves $3? And that will kind of give you an idea. is that worth it? Because if options are overpriced, what happens is you'll see that 97, or actually if it's a call, you'll be looking at the 91, because a $3 move will that's what it will look like. So you'll see that a $3 move, and if options are overpriced, may only get you a $1 gain in the option. Look at Mara options right now. The only way you can trade Mara options, and I'm bullish on Mara, is with a spread. The options themselves are so ridiculously priced that you can't make any money, unless the stock has a monstrous out of sigma move. So, yeah. So I guess the answer to your question is everybody can do it. Just start looking at the ladder, and use your common sense.
I just had to share a comment somebody posted for Wendy, and this is, I believe, from Brandon. He said, just wanted to say hi to Wendy. He said, I'm starstruck today because I have followed her method and emails for years now and never seen or met her. I love you, and thanks for everything thanks for everything, Wendy. So that was from Brandon. So thank you, Brandon. I'm sure Wendy. Somebody wants to know what happens to an in-the-money option if I hold it through the end of expiration day. Do I lose everything? Well, I guess it depends if you're long or short that option, right? Keith, what do you say?
So let's just give it a hypothetical. Let's say you're long a call that is in the money and it's deliverable as the stock. That means that you would be, you would have to exercise your position, which would automatically happen. Unless you don't have enough cash in your account, then it could create a little bit of an issue for you. Traditionally, your brokerage company will be calling you, telling you you don't have enough cash to buy this stock or the number of shares that you can represent in the options. Would you like to close the trade yourself, or do you want us to do it for you? They don't normally like to let it happen and then say we'll deal with margin, or in some cases just basically telling you we're not going to exercise these calls for you, and then you will lose the premium. That can occur. So traditionally, people do close their options before expiration for that reason, unless they're going to finish out of the money worth nothing.
Okay, great. So hopefully that clears that up. Somebody had a question. Let's see. This is from Brent. And do any of you sell cash secured puts?
I can answer that. Cash secured puts is very similar to covered calls. In other words, the risk reward is very similar to covered calls. You're selling option premium, and when you would sell a put option, you're hoping that the stock closes above the strike of the put that you sold. If the stock closes above that strike, of course, you realize the full profit potential. But from what I've seen in the past, if you're buying a 50 strike option, you should have $5,000 in your account to cover that 50 strike option. But what I've never recommended selling puts to my members, just because I know in market crashes, what happens is people don't have, for the 50 strike put, they don't have $5,000 in your account. They have the minimum, which would be, I think, $1,000. So you can sell a bunch of puts, and there could be some unforeseen overnight event and the market crashes, and you're completely wiped out, and you could wind up owing your broker money. And that happened in the 2008 crash, and it happened in the 2001 crash, and it happened in the 1987 crash. So long story short, cash secured puts, if you have the full cash amount in your account, are similar to a covered call strategy. You can get hurt during a crash, but you can usually exit before you have a 10 or 15% loss. But if you have leveraged short puts, you could sell a put for $1, and if that stock tanks, you could have a $900 loss on that $100 put. So it's very, very risky, and I don't recommend it to my members.
Just to like toe on that with the SPY options, if you were to sell Friday's 480 put, you would collect $111. But if you get assigned on that, it's, $480 times 100 shares. So, you got to have 48 grand just to try to make $100. Doesn't seem like a good risk reward a lot of times. But a lot of people do it anyway.
Yes, and you have to have a high percentage of winning trades also to break even. So I'm not that good.
Okay.
Don't sell yourself short.
So question for Wendy. Let's see. This is from Robert. Says, how should we set stop limits for options? Do you set a conditional limit based on the change in the underlying stock price to trigger the sell order? If so, how should we calculate it? Thank you. So somebody that follows you, Wendy, as well.
Well, usually if I'm setting a stop, I do it based on the premium that I have paid, so that if I invested, say, I'm just going to say $1,000, and if I am want a 30% drop is all that I'm going to accept, that's then what I would set that as, a 30% drop in the premium that I am. And I know different brokers handle it differently, but that is kind of what I do. In my services, I usually say no more than 50%, but I know some traders set stops and it's for less than that. So it is whatever you're comfortable with. It's a personal choice. So.
Okay. And let's see. Okay, someone just made the comment that they appreciate the webinar and how to get involved. Looking forward to gaining more knowledge. This one looks like for Joe Duffy. How do you pick market bias to trade the trend from, monthly chart or where?
Well, if I'm going to use multiple time frames, I use multiples of 4. So if my entry is going to be triggered off a daily chart, I'll look at bars that each bar is constituted of 4 days to kind of determine the bigger trend. But sometimes I'll use 2 days as the bigger trend and half-day charts as the entry trigger trend. So I hope that answers the question. If it doesn't, restate it, and I'll try again.
I think you got it. I'll see if they respond. Somebody wants to know, Chuck, why is it that you didn't do well with Tesla last year? What was it about Tesla? Just the volatility, or what was that about?
Sorry there, I had to unmute myself. I've just had a problem for years now trading Tesla. I think it's a me issue. I just can't make money with Tesla, and it's just too hard to trade. So I just avoid that one because there's plenty of other opportunities.
All right, and the other question that came in from Thomas just wanted to know if you guys have any recommendations for charts that are good, that are free to new traders.
I like to use stockcharts.com. They have a lot of great charting services. Most are free. You can get more advanced charting with, I think it's $15 a month subscription, but they have a load of free charts, and the charts are very reliable, and I've been using them for many years. So that would be my recommendation.
Yeah, for me, I'm a trading view guy. I think it's probably 80% of the market now, or maybe more, of charting packages. They do have a free version, but their premium version, which has absolutely unbelievable amount of stuff on it, I think it comes on sale once a year for 300 or 350 a year or something. So I'm trading view, but you can get free charts from them too.
And I totally agree with Chuck that I have used stock charts for 20 years, and their charts are just very easy to read and very adjustable as far as indicators and all of that. That they're awesome.
All right, fantastic. So this next section I wanted to get into is for each one of you to present one trade idea for the year 2024, something that you could be a trade setup. It could be, you know, a sector that you like, whatever it is that you want to give to the folks here, some value as we continue to move here. So let's see. I'm going to pick on Joe because Joe, I know you like to, you know, you're very progressive in your thinking, and I know you're already ahead of the game, and you've got stuff that you want to share with these folks. So, what do you got for us for 2024?
My stock for the year is Oxy Petroleum, and I've got a monthly chart up here of Oxy, which I really wish I could show because it tells you a lot about what I do and how I do it, and the stuff here that is proprietary or is my own. So you're not going to pick it off the machine there's no RSIs or ADXs. But anyway, the bottom line is my pick for 2024 is Oxy Petroleum. Closed at $57. And you know, it's a big picture. I'm looking at a monthly chart here. So,
is that the ticker OXY?
OXY, yep.
Okay.
You know, shorter term, I like Mara, but again, you got to spread. That's a marathon. It's crypto. But big picture monthly chart, I like Occidental Petroleum, OXY. Yep. Really sorry I couldn't share this because it answered a lot of questions that have been talked about before. So.
Well, the good idea is you got the idea out there. Now people can do their homework on it. So let's move over to Keith. So Keith, tell us what you've got for these folks in 2024. I'll go ahead and make you the presenter here. I'm assuming you've got something to share screen-wise, yes?
Yeah, I'll give it a shot.
Okay. Well, that's technology, right? They can. There's AI, but then they're still struggling with screen share, I guess.
Yeah. Sure, I'll launch picture in picture. Why not? Can you guys see my chart there?
Yes.
Okay. Yeah. So, you know, one of the things I said before I was looking at were the financials, and in particular, I'm actually looking at the regional banks. There's been a bit of a holdback on regional banks because these are the banks that have been most you know, vulnerable to these big bank issues. The latest of which, of course, is New York Community Bank. Cut their dividend, said that they're having some issues with capital requirements after getting over that $1 trillion threshold. So that helped drag down the regionals. The name that I'm looking at right now is Regions Financial, and I'll tell you a little bit of why. Number one, part of that regional banking index, if we get above this high from December 14th, it looks pretty exciting to me because there's one of the things I look at is stocks making a new recent high as a way to potentially give some momentum for a longer term trade. And then, of course, I, being an options guy, like to look at options. And you can see the VIX market here, implied volatility at 6-month lows. And if I actually pull up Regions Financial on its own and look at their implied volatility, the IV levels here in red, and low means implied volatility is low, which means options are about as cheap as they've been in the last 6 months. And realized volatility in blue here is actually higher. So we're seeing action. We're seeing movement in this stock overall. So options don't look like they should get much cheaper. That can help me get a good leverage trade in a name that I think has some potential for a long-term trend. So when I do my options analysis here, I'm saying low implied volatility. Of course, I'll look at the ladder that was mentioned, all the term structure here you can see on the top for my SIBO Live Vol program here that I use. And that can help me find the right way to implement a trade in a regional bank. And I think this could be an exciting one for me.
Excellent. And those that take your course, I'm guessing are going to learn how to use all these tools and how to pick trades.
Yeah, so a lot of what I do with my course is try to show people what strategies tend to pair well with what option strategies. So when I see a trending stock versus like a shorter term swing trade or a stock that I think could be in consolidation, there's different option strategies you can utilize for each of those depending upon, implied volatility, the term structure. For those of you that like the VIX, I look at the futures term structure here. You might wonder why there's a spike here. That's the election. So just looking at term structure, skew, a lot of the stock fundamentals, that can help me find a trade that has a higher expected value than just a simple entry in stock with a stop loss. So I try to use all the tools that I've learned over the years as a market maker, working with hedge funds and proprietary trading and everything else, just because that's, the way I overanalyze in order to find the best trade I can.
No, fantastic. So those in the audience, if you want to learn from a former market maker, hedge fund trader, Keith may be your guy. So, all right, let's. I'm going to switch over to Wendy.
I'm assuming you can see this.
Yep, it came up perfect. I'll get your daily profit play up.
Right. So this is just one thing that I wanted to mention to the folks that are watching. This is free. This is a daily newsletter that comes out, and I'm going to try to show one here. This is also TradeWinds, and this is a website you can click on, TradeWindsDaily.com. And so what I just showed you, if you were to sign up for that, that then gives you a newsletter where I talk about a trade and list a candidate every single day. But it is also placed on this website, and all of the folks that are here today in this session also are authors with TradeWinds and have articles and such. So if I click on this right here, this is an article that was yesterday. And so it is discussing a trade. And this is Schlumberger and is showing a indicator and so on. So each day of the week, I discuss different indicators that I am trying to teach and show how you can learn from them and apply them to the charts. And so I have mentioned all through this that I want you to make money with my services through the trades that I present, but I am also just all about teaching and wanting you to learn to be able to read the charts. And so one of the indicators that I talked about earlier this week, TSI, and this particular symbol is SYK, which is Strikers Corp, and it's a medical equipment. And so this is just a very easy indicator to be able to look at and learn as far as the trade direction. You can see the black line crossing the red line. When it does that, that is showing that there is strength, and this is a weekly chart. And so that you can see that price rose. It rose all the way from down here about 200 points up here to almost 300. And this is a very, very clear indicator. Then you can see here it crossed down, and you can see that price dropped. Again, this is the most recent period. The black line crossed up. Can see that it headed up here from $250 all the way up to $335. And so again, my goal is to be able to teach traders to be able to read charts, read the indicators, have them talk to you and share the information about price and what is expected to happen, and for you to be able to then apply that and become a solid trader yourself. And that is my goal. And these articles, like I said, are in the TradeWinds site. Again, it was tradewinsdaily.com, and there's going to be information that I am sharing, and there's going to be information from all the other folks that are here today. So it's something that you can really use to learn and advance. And so as far as a symbol that I'm interested in and thinking that is going to head in the right direction was the one that I was talking about, SYK, Striker Court. And again, that's a quick look at the chart. You can see that it's had a really nice week rising here.
Sure has.
Yep, been very, very nice. 7%, 7.75. So that's awesome.
All
So
right,
I think
great.
that's it.
Yeah, thanks for sharing that, Wendy. I think that's definitely a benefit for folks. And let me, Chuck, if I can, let me just squeeze you in before I know you got to take off. Let's see, is Chuck still with us?
Hey, John.
Okay.
I have a conference call for Australia in 4 minutes, so I'm going to have to drop off here. Okay.
Thanks for being here. I know everybody appreciates hearing from you, and maybe we can send your trade idea out after with your charts there. So appreciate you being here.
Okay, it was great to be here today, folks. Thank you.
Joe, did you want to try again?
Sure. Yeah, I can try briefly again now.
Yes.
Okay. All right. So here's this Occidental Petroleum. So you can see here's my version of trend here. Just when it's green, let's trade long. When it's red, we trade short. So Oxy's had a nice long correction down here where it accelerated into the bottom, which is nice. And you know, it started to recover. We're now back into this thick stuff here where you can see there's been a lot of price churning around over the last several years. This is a monthly chart. All right. So you know, to me, it's in a nice uptrend. It's going in a nice little flag. The trend is green. This is my scoop oscillator here. When it's purple, and we're going to have a nice little. It looks like we're going to have a nice little divergence here at the low. If this thing can start to turn up, I think it has really good potential for 2024. So that's Oxy on the monthly chart. Okay, that's it. So I'll stop sharing. Okay.
Yeah, perfect, Joe. All right, thanks for taking another shot at that. I think folks will be interested in your indicators there. Those are all proprietary, I believe, and when you sign up with Joe for any of his services, some of those include the indicators, or at least the access to your charts there. All right, let me just share my screen now, and we'll start getting ready to wrap up here. See my screen again here. Just you know, we put up these questions because, you know, everybody's here for a reason, right? You're all looking for a way to generate, you know, some maybe a monthly income, or you're trying to build your retirement for yourself, you know, and, you know, maybe you're earning a few percent a year in your mutual fund, in your IRA or whatever. It's, you know, it's not going to cut it when you got a decade left before you retire. You got to do something different, right? If you're looking for a trusted source where you can learn to trade and you'd like to earn some income while you're learning, you know, maybe you don't have the time to do this yourself or the expertise, and you're looking for strategies you can trust. You know, one of the goals today was to, you know, hopefully provide some solutions for you to consider. So what we've done, any of the traders that you've seen today, whether you are talking about Wendy or Joe or Keith or Chuck, we have all their strategies here at FFR Trading for you to choose from. And if you're looking to elevate your trading game, this is the offer we've got. You can sign up for any of our traders programs today and receive a 50% discount. Plus, you'll get an additional year of service completely free. Right? But what you need to do is you have to call us because we have to speak with you. We have a lot of traders with a lot of different strategies, and we have to make sure, those strategies are a good fit for you. So some of you are looking to generate monthly income. There may be some strategies that are more suited or better suited for that. Some of you are looking just for the capital gain side of things. Need to be real aggressive. All right, so give us a call, 800-883-0524, or you can use the 737-292-4425 number. If you have to, you can email us, support@ffrtrading.com. Those numbers in that email is on the slide there. Again, you do need to call us. This is good. You've got to call us tonight, because this is going to be limited. Obviously, we're not going to keep this open, and we want to be able to speak with you and make sure we get you in the right program. Our goal here at FFR is to build you a well-diversified portfolio of strategies, so that, as you know, as traders, guys, you need to have multiple strategies. When one is in drawdown, the other strategy may be non-correlated to that strategy and performing very well. So it helps smooth out that equity curve over time. All right, but give us a call, 50% discount. If you prefer one trade over the other, that's fine. We'll go over the programs, give you the performance, how they're doing, all the particulars that you need to know so you can make an informed decision on that. Again, you'll get an additional year of service for free. All right, so just some closing remarks. Anybody, anything that you want to share before we sign off here?
Just have a great evening.
And
been
thank you,
fun.
Wendy. Thanks for being here. Joe, I know you've got something to say.
No, it was good. Thank you for hosting, and that's it.
All right, well, enjoy the golfing while you're out there. And Keith, this is your first roundtable. We appreciate you being here. Any last thoughts for the folks here?
Thanks again for having me on, and I appreciate everybody taking the time out of their days to listen to us chat about the markets. Hopefully you got something good out of it.
All right, fantastic. So we want to thank everybody. We want to thank our esteemed panelists here and all of you for joining us. Remember, trading is a journey, and we're here at FFR to support you every step of the way. Don't miss the chance to learn from the best and enhance your trading skills. So thank you, everybody. And happy trading. Again, those that stay through the end, we've got our gift for you, that ebook from all the traders that we'll send out to you. And if you want a recording of the webinar, just give us a call or email us, support@ffrtrading.com, and we'll get you the copy of the webinar. All right, so signing off. Take care, guys. Have a great rest of your trading week. All right.
Good night, everybody.
Good night.